fingers on one hand in terms of opportunities in the space. So what you see typically with nickel is they trade out at very, very high valuations because there's a real scarcity, there's a real scarcity of them, and people are willing to pay a scarcity premium to get those high quality assets. The geophysics we have to work with are larger than what's in place at Dumont, which is the largest undeveloped nickel sulfide. And we've only drilled off 1 kilometer of what's an 8-kilometer structure.
Right.
So again, in terms of the scale potential of this asset, this set of drilling really confirms that this has a very, very large scale potential.
Hello and welcome to Crux Investor. We spoke earlier today to Mark Selby. He's the CEO of new venture Canada Nickel Company. They're listing on the TSXv in January. They called us to talk about the drill results in the press release this morning. I have to say, we were more interested in discussing his learnings from his time on the Dumont project and how he hopes to take those learnings and deliver an accelerated strategy for his new venture. If you want to look at any of the topics we discussed, look in the description below, and that'll take you to that part of the video. Also, if I could ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And of course, if you want to see more videos like this, click the notification bell. Anyway, let's hear what Mark had to say. How are you, Mark?
I'm great, Matt. It's good to see you again.
Yeah, well, thanks for the call. I saw the press release this morning. Looks interesting. Would love to get through it in a little bit of detail with you and try and understand what it means. We've done some numbers here and I want to make sure we're along the right lines. But before we do, can we just remind everyone what you're doing? Because obviously you've moved on from RNC Minerals. You're now at Canada Nickel Company. What are you up to?
Canada Nickel is going to be focused on the Crawford Nickel project. We're in the process of acquiring and taking the company public, assuming all the regulatory and shareholder approvals come through. This was a joint venture of a joint venture, and in September, we announced that we'd come to a deal with the 3 parties that were involved. Last week, Noble put out a press release that said we had basically consolidated 100% of the asset, and now that is owned by Canada Nickel. And now we're moving towards a Noble shareholder meeting, which will happen on December 27th. At that point, Noble shareholders will approve to dividend out 10 of the 12 million shares that they're receiving. And then shortly after that time frame, again, assuming all the shareholder and regulatory approvals come through, we'll look to be trading publicly under the ticker CNC in January 2020.
Okay, so what are you going to be doing that Noble couldn't?
Yeah, no, I think the key thing is one, obviously this is a pretty difficult market to raise capital. So they had drilled this deposit in late 2018. The first results came out in early 2019. So it's a new nickel sulfide discovery. But again, I think, having a 3-way structure is a pretty complicated structure to own an asset, number one. And then 2, again, this deposit, looks very much like the Dumont project that we spent 9 years advancing at RNC Minerals. So I can bring all of that expertise and experience to bear, to be able to advance it quickly. And I think, the clearest demonstration of that is we announced in September we had $5 million fully subscribed. We've upsized it just because we've had so much demand at this point in time. And there's very few, early stage exploration base metal companies that are raising $6.5 million, which will give us everything we need to get through the first stage of work on the project.
So their problem was clearly money. You're saying that you've perhaps got access to markets because of your track record. They haven't got that, but
yeah,
fundamentally the asset must be clearly attractive to you. I mean, what are you seeing that the market can't?
What's very exciting about this is there's very few nickel sulfide projects. I got involved in RNC 9 years ago because, we saw a shortage of good nickel sulfide projects for the next generation of nickel demand that's coming down the pipeline. That next generation's taking a little longer to show up, but we're now at a point where we believe we're entering a new nickel super cycle. And so for us, what is great about Crawford is 3 things. One is the scale of it, based on the geophysics, which is this is one of those deposits where the geophysics really outlines the size of the prize basically. And so the geophysics we have to work with are larger than what's in place at Dumont, which is the largest undeveloped nickel sulfide project. The other key thing is it's in a great location. We're in Timmins. It's well-established mining camp, a number of mines in the area. We're just 15 kilometers up a highway. from the Kidd Creek mine, and because it's an established mining camp, the third key reason here is we have all the major infrastructure in place. We're literally underneath a highway. The rail line stops about 10 kilometers to the south, and there's literally 3 high voltage lines that run nearby the property. So, in terms of being able to build a big, large scale nickel project, you've got all that key infrastructure already in place.
Okay, so I buy the Timmins component. Can I just come back to your first point, though, which is, I think with my investor hat on, I'm trying to work out whether this becomes another Dumont, where you're sitting on it 10 years and you can't do anything with it because the market doesn't allow you. What gives you the confidence? Yeah,
so I think, fundamentally, the biggest change is, I would say, of 7 of the 9 years I was involved at RNC, I spent most of the investor meetings I had trying to convince investors that nickel was going to be a worthwhile long-term investment. Today that has fundamentally changed. I would say in 100% of the meetings I have, people are very constructive on the medium and long-term outlook for nickel, and are looking for new nickel opportunities to invest in. I think the second thing is, again, because of our experience at Dumont, we did a scoping study, 2 pre-feasibility studies, 2 feasibility studies during that time frame. So a significant amount of engineering work to get that project advanced. We can take all of that experience and apply it to this project. Again, it's similar in scale and mineralogy to date. It's early days, but what we've seen so far looks very similar. And then 2, in terms of the physical terrain, the environment with which that deposit sits in, is we're about 300 kilometers away from Dumont, and the terrain is very similar. So we can take a huge amount of the work that's been done there and apply it to this deposit, which means we can move much more quickly than we were able to at Dumont.
Right. Okay. So you're saying it's a question of timing in the market. You're hitting it at the right time. So that's why that's one good reason. And the second being you're saying we've got some key learnings that you personally have picked up whilst working with the Dumont asset, and you think this is a similar ore body. Okay. So, and then the point you're making now is you're saying, well, that will allow us to accelerate the time frame in which we drive this project. But what does that actually mean?
Yeah, so what that means is, in terms of again, our path forward in terms of steps, we'll have a resource update out at the end of March. We'll have our first scoping study done by next fall, and then we'll move directly into a feasibility study. Again, the scale range of engineering of engineering that we need to do, we've again, based on what we've seen so far at Crawford, what we've done at Dumont will fit very nicely, for that asset. So, so in terms of the, getting to a feasibility study, we'll be able to compress that timeline, number one. Number two, given where the project is in Ontario, again, in established mining camp, this is an area that, has very constructive community First Nations relationships. And I think, again, we'll be able to get through that phase of the project, project development cycle relatively quickly.
Okay, but let's be clear. So you're talking about a resource end of Q1 in 2020. A scoping study, by scoping study, you mean PEA? Just trying to understand.
Yep.
By fall, so what's that, Q3, Q4 time?
Yep, end of Q3, early Q4 this coming year.
Okay. That will allow you to do what? You do the permitting at that point, or how does that work?
Yeah, we can. Once that's in place, we'll be able to start the permitting process and really start to have, once you've got the broad strokes of what the project could look like, then you can start to, really engage with community and First Nations in terms of what the project's going to mean in terms of benefits for the community.
Right, and then you skipped very quickly onto a feasibility study. Do you mean pre-feasibility study, or you mean a feasibility study?
No, we'll go right into full feasibility study.
Right. Okay.
Again, the combination of both, again, early days, but
Sure.
What we've seen so far, the mineralogy and geology of the deposit looks very similar to Dumont, and then the location and the terrain with which the deposit's located is also very similar to Dumont. So, those are the sort of the 2 key drivers that you need to get your head around. And because we've done that 4 times with Dumont, we'll be able to take those learnings and be able to jump right into a feasibility study.
I appreciate there's some big extrapolation I'm asking of you here, so bear with me. But what are the things that are going to be potential roadblocks? You got to look at metallurgy. That's got to be number one. You got to work out what you're looking at there. So is that true, and what are the other things that could be, hurdles?
Yeah, so I'd say, that, question one is in terms of the geology and the scale, and I think, the drilling results that we put out in the release this morning,
Which we'll talk
I think
to.
speak
Yeah.
speak to the scale of the resource and the kind of grade and byproducts in terms of, significant amount of cobalt and significant amount of PGEs that are there, which is great. To the next big thrust of work, is we're going to be working with actually 2 labs, so we can accelerate, the mineralogy that's done. Again, these type of deposits, the key thing is to understand how much of the nickel is in minerals that are in a recoverable form. So in Dumont, and what we've seen so far, it's hazelwoodite, aurorite, pentlandite, and so we just need to do that test work to understand that that's there. So that's a key piece of work that'll get done through the first quarter of this coming year. Once that question's answered, that again is exactly correct. That's the sort of key question at this point in time. But again, what we've seen so far looks very similar to Dumont. There seems to be lots of sulfur in the system. So again, fingers, it's no 100% guarantees until you actually do the test work. But what we've seen so far is very encouraging in terms of what the mineralogy network should come back with.
Right, and I guess the next component will be cash, right? I mean, let's not talk about the market just yet. I do want to get onto that, but the next component is cash. So you've raised some cash recently, or I'm not sure if that's closed yet, but or closing, probably close when you go public. Where's that going to take you through to? How long does that last?
Yeah, so this financing, $6.5 million, is fully subscribed. $2 million goes out the door as part of the transaction to consolidate the property. We'll have the $4.5 million. That gets us through all of the initial geology and all of the initial mineralogy work that we need to do. So to that first resource update and to that first set of metallurgy results that say, hey, there's a workable amount of recoverable minerals in this ore body, with which we can then go off and start working on the scoping study at that point in time.
But you will need to raise money for the scoping study, is that what you're saying?
For the scoping study to do sort of the additional resource definition drilling and then the engineering work and so forth. At that milestone, we'll look to do it, at that point in time. The key thing there is today we're going out at based on the financing, we're at $13.5 million valuation. Mm-hmm. I think if you look at a number of the peers, you're looking at $50 to $100 million. Legend Mining put out a couple drill hole results yesterday, and the stock popped almost $100 million in market cap. What we've outlined, that cube of mineralization that we outlined today is a very significant amount of nickel. And so, I believe once we get the story out there, we get trading publicly, I think we'll close the gap versus our peers very quickly. So, in terms of investor interest, I think it'll be fairly substantial. In terms of that next capital raised, I think, the key piece there is I've had more meetings in the last 5 months with large strategic investors in terms of the large mining companies, than I did in the last 3 years with Dumont. The big mining companies didn't like nickel for a very long time. So, the very simple fact of the matter, and having worked at a large mining company before, you go through your annual planning session every year, and slide 2 or 3 of every one of those presentations are, these are the metals and regions we like. These are the metals and regions we don't like. And nickel was always on the don't like list. Cobalt didn't even make most lists for most companies. Yeah. And so today, in an environment where nickel and cobalt are very much metals we like, on that list, there's very few ways for those big mining companies to get exposure to battery metals outside of Indonesia and the Congo.
But are there enough of those conversations? Because there's going to be companies like Dumont. I don't expect you to comment on Dumont because that's, over here. They're way ahead of you. They're way more advanced. You're early stage. You've got some drill results, which we will talk to in a second. But are you finding a place in this cycle? You're having conversations, but is that just people creating options for themselves? Do you think you could be of genuine interest soon to these people, to these strategics?
Yeah, no, I mean, again, I could tell you from the discussions I had with, various people in the battery metal supply chain during the past 2 years with RNC, that were, keen to get as much nickel and cobalt as they could outside of the Congo and outside of Indonesia. They're looking for the great thing was with Dumont, for the first 7 years, we'd get questions about how we could make it smaller. The questions with the battery chain is, when are you able to do the next expansion? Could you expand it twice? What would be the constraints on that? So in terms of interest from the strategics for a new large-scale nickel project, I can tell you that, there will be no shortage of interest in it. And I think the other key part with this is, what's different about nickel, and I'll remind investors about what happened the last time we went through a super cycle. There's literally hundreds of gold projects. There's dozens of copper projects. Again, we talk about Dumont being one large scale, feasibility study, shovel ready project. There really aren't any other large scale feasibility study nickel, cobalt projects ready to go.
Right.
And so, it's fingers on one hand in terms of opportunities in the space. So, in the last site, what you see typically with nickel is they trade out at very, very high valuations because there's a real scarcity. There's a real scarcity of them, and people are willing to pay a scarcity premium to get those high quality assets.
Well, let's build up to that point. Okay, so you talked about accelerating the time frame in which you get to the point where you complete a feasibility study. Okay.
Yep.
And what sort of time frame in an ideal world? What sort of time frame could you get to a point where there's a feasibility study on the table to look at?
Yeah, end of 2021.
Right. Okay. End of 2021. So we got a time frame. We got a marker there. So
yeah.
In the marketplace, other nickel companies. I mean, have we got a sense of what are the other names out there? What have they gone for at a similar stage? How have they been valued at a similar stage?
Well, I think you have to go again. There haven't been very many sort of million tons of contained nickel, reserves out there.
Right.
Nova Bollinger was a discovery in the early part of this past decade. And it exited at a $1.5 billion valuation. Right. Prior to that, in the 2003, 4, 5, 6, 7 time period, you had companies like Jubilee Mines with a few sulfide mines in Western Australia get taken out for $3 billion. You had Lion Ore get acquired for $5 billion. You had Dynatech, which was just a laterite project in Madagascar, got taken out for $1.5 billion.
Right.
At the time. FNX got taken out for $1.5 billion at the time. Right. So, and then you go back to Voises Bay and Mr. Friedland back in the mid 90s, because again that was one of the first new sulfide nickel sulfide discoveries in a long time, and I think that's the opportunity here is there have been some smaller nickel mines in the Timmins area before, but nothing of this scale. So again, to have a true new nickel sulfide discovery area is very exciting, and I think it's going to be exciting to the major mining companies.
Okay, so your job as CEO of this new company is to deliver an accelerated time frame without diluting the shareholders as best as you possibly can. So that's getting it done for as cheaply and as quickly as possible. That's what you got to do, right?
That's exactly it. Yeah.
Okay. So a few things to deliver between now and then, but okay. At least I just wanted to. You'll be busy, but we're trying to paint this picture here, and you've raised this money, and I know from our previous conversation that you are a big shareholder in this yourself.
Yeah,
this is like meaningful, not
me. My money will be in here. Yeah,
right. So because I don't want to hear that well-trodden phrase of I'm aligned with shareholders. I get it, but it needs to be painful if it doesn't work. Right. Okay. So
I was at the pain point through RNC's time period, and again, people can see my filings on SETI in terms of what I owned and what I bought over time, and I'm planning to do the exact same thing here with Canada Nickel. So
this is very different. This is a small company. You don't get to pay yourself a big salary these days, do you?
No, exactly. So
okay, there's the difference. Yeah. Okay. So let's get into the press release from today, okay? Because you mentioned some numbers there to me, and we had a chance to go through this, and we've done some numbers of our own. I just want to get a sense of the scale here. I know you couldn't possibly comment, but I can definitely extrapolate, and I want to make sure my maths is right. So why don't you talk us through the press release that came out today? What are you trying to get across to people?
Yeah, I think there's sort of three key things that I think people should take away from it. One is basically the scale of the resource that we've been able to delineate so far. So, nearly 1.5 kilometers long, 350 to 600 meters wide, 500 meters deep, sitting in again, geophysics does let you see what you need to see, and that geophysics goes down, almost a kilometer at depth. So, that cube of mineralization is a very large cube, and we've only drilled off 1 kilometer of what's an 8-kilometer structure.
Right.
So, again, in terms of the scale potential of this asset, this set of drilling really confirms that this has a very, very large scale potential.
But you haven't drilled enough. Sorry, let me just say, you haven't drilled a lot there. So are you just extrapolating, and there's an expectation that it's going to be the same the whole way through this body? I mean, how do you get to that?
No. The key there, and it comes back to a point that you talked about earlier in terms of being able to advance this as low cost as possible. The thing with a disseminated ore body is that the drill spacing that you require is much larger than you would say for someone who's looking at a gold deposit or something like that, which is a regular narrow vein structure. Dumont spacing is 200 plus meters for inferred, 100 meters for indicated, 50 meters for measured. We'll see what the geostats show for this deposit, but again, we're working to that. It will be very similar to Dumont. That's number one. And number two, again, in terms of the holes we've drilled, almost all of the drilling is in mineralization. So again, this isn't like a gold deposit where you're drilling 1,000-meter hole and you're going to hope to hit 10 meters of mineralization. We're drilling a 600-meter hole, of which 550 meters, is in mineralization. So in terms of being able to add a ton of metal, per meter of drilling, this is very, very, cost efficient drilling. So that's why, again, I know it doesn't seem like a lot of holes, but geologically, that we're on track to be able to deliver that resource at the end of Q1.
Right. So you're saying it seems very consistent, and you're hitting mineralization whenever you put the drill in the ground. That's exactly what's giving you the confidence. Yep. Okay. Sorry to interrupt. Please carry on.
Yeah. And then number two is the higher grade starter area. This is, if there's one graphic in that release that is sort of the key one, is that figure 3 where we show, the scope of this higher grade area. So for reference, Dumont is reserve grade is 0.27% nickel. And what we have in this area is anywhere from 100 to 200 meters across a kilometer of that strike length. That's, just over 0.3% nickel. We have a smaller area within that, which is, tens of meters wide, that's over 0.35% nickel. And again, I know these sound like low numbers, but the key there is, over 0.3 is 15 to 20% better grade. 0.35 is a third better grade. And when you're, basically, when you're operating a mine mill, that cost per ton is fixed. And, if you're able to get 30% more metal for every ton of material you're processing, that kind of cash flow, falls to the bottom line. A lot of lower grade deposits don't have, not a lot, but a number of them don't have that thing. And so what happens, just like what they have to do at Dumont, is they basically mine at about twice the rate to get some of that higher grade ore through the mill and then build up a low grade stockpile, which again, it uses a lot of working capital to have tied up in that low grade stockpile. Again, we'll see when we start to do the engineering studies, but based on where that material is sitting, I'm very hopeful that we'll be able, to mine that, day one kind of thing.
Okay, so again, just to kind of break that down for the less technical, we're saying that you've got a higher grade ore sitting near a surface, and the lower grade stuff is underneath that. So you're going to be able to create more cash quicker because you're going to access that higher grade earlier.
Yes, exactly. It's higher grade earlier. There's still lower grade at surface, but the key thing is within that 500 meters. There's 100 to 200 meters that has a higher grade content, and again, you can start your pit, in that part of the ore body.
Right. Okay. Interesting. Okay. So, and I notice obviously in there. So that's the kind of nickel component, but there's also obviously cobalt and PGM in there too. Are they meaningful?
And I think that's the third key takeaway there is again, Dumont was the ninth largest cobalt reserve in the world, and it had a cobalt grade of 0.0107% as a reserve grade. What we're seeing so far is a lot of 0.012, 0.013, and then as the nickel grade goes up, we're seeing even higher cobalt contents at 0.015, 0.016. So we'll see when the resource is done, what the cobalt cobalt resource looks like. But again, based on the assays we're seeing, I'm hopeful that we're going to see a meaningfully higher amount of cobalt in the deposit. And then again, Dumont has a nice little, you multiply anything by 1 billion tons, you end up with a lot of palladium and platinum. And again, palladium is a metal that there's very few opportunities to get exposure to. Again, it'll be a byproduct for this deposit, but the potential resource and that first resource statement again could be a fairly substantial number of palladium ounces.
Absolutely, and but those markets need to come back themselves. Okay, nickel, I think people are excited about. It's a fairly hot topic at the moment. And I say you're having better conversations now than you have the last 3 years. But cobalt's not in favour at the moment. Just for my benefit, how do you? I mean, you're nowhere near any engineering studies or scoping studies. But how do you factor those things in, or do you literally treat them as a potential byproduct? How do you quantify it?
Yeah, no, it's a byproduct. The cobalt and PGMs, at Dumont are associated with one of the 3 nickel minerals. Again, we don't know yet at Crawford where those materials are sitting. But the thing that we really focused in on at Dumont was to produce sort of the highest grade, highest quality concentrate that's there. And if cobalt prices are high enough, we'll ship more of it off to the smelter refinery chain to get that cobalt recovered. If cobalt prices aren't high enough, then we had a lower cost roasting path to be able to take that that material to market. So again, we're not at that point yet, but again, we'll adopt the same approach, to make sure that regardless of where cobalt PGM prices are, we're able to, if they're there, we can take advantage of it. If they're not there, we've got a low cost route to get those nickel units to market.
Okay, so help me with my maths here. Okay?
Yeah. Okay.
Bear with me. Yep. So I'm hearing 1.4 kilometers strike length by, let's say, average 450, something like that, times 500 meters depth. And I know it doesn't stop at 500 meters, but those are the numbers I'm looking at in here.
Yeah.
Times 2.6 tons per cubic meter. That gives us somewhere in the region of about 800 million tons. Okay.
Yeah.
So you're getting towards this billion number that people get excited about. Is that what you saw when you spoke to Noble? Do they know what they've handed over to you?
Yeah, no. I think they definitely saw the potential. I think that there's just 4 holes in it before, and so it hinted at that potential. The geophysics showed it could be very large. So again, that's what's exciting about this. This release is that since September, we just didn't sit and wait for the IPO to happen, and because again, we could have done no drilling, just waited till the money came in, and had news flow happen after the IPO. But again, this is about advancing what we think is going to be a real project as quickly as possible. So we have had a drill turning since September, and those 9 holes that we drilled, again, we didn't do 20-meter step outs, just trying to get good news. We went to one end and the other end of that structure, the biggest, thickest part of the structure, to deliver that kind of a scale answer. Again, we won't know what that number is until we do the resource at this point in time, but that's that is the kind of math you need to think about.
Right. Okay. Because just to finish that off, so at 800 million tons times 0.3, the grade, you're looking at a circa 2 million tons of contained nickel. So you're right. It's meaningful. I know you can't comment. But I needed to do the math to understand what we're looking at, because we've spoken to a lot of small nickel companies, early stage nickel junior miners. The scale isn't there. And you've got to then question whether the economics are there. So I just wanted to be able to position you in my mind as to what you could be. It's not because again, CEOs, a lot of words, a lot of rhetoric. It's part of the sales process. You got to do it, but it's important to actually understand what reality looks like, or potential reality could look like for you. You've got a few things to deliver. But
yeah. Oh yeah, big
that
time.
helps.
Yeah,
Thank you.
It's
Thank
not
you.
there yet. But I think that's a key thing for investors to think about right now is in terms of, base metal stories. You see, SolGold's copper project in Colombia, and it's trading at, multi-$100 million market cap,
Yeah.
and there are other copper projects that are feasibility study in a safe location, even nearing production, and they're trading at a fraction of that value. I think, what exists in the market today is a real bifurcation between those projects that could attract multiple majors' interest, because again, they want to grow their base metals business, and there are very few deposits that have that kind of scale potential, that would attract those kind of companies. And to me, that was what was compelling about Crawford is, just looking at the geophysics, which I know from Dumont really does help paint the size of the picture, and seeing what the overall potential of this project could be. I would say we're not quite there yet, but we're getting into the zip code where the majors, again, I said, I'm having meetings with the majors who've already seen what we've had put out prior to this release, and were intrigued by what they saw.
Right. Okay. But like I say, I think that's all optionality for them, but there's definitely a lot of the right things in place. I'm certainly hearing that. So I do appreciate that. You've got a bunch of stuff you still got to deliver, which is really, really important because you're, early stage. You've got money to take you through to, just pre-PEA, which is great. You are going to need to raise some money. At the point you go and raise some money, you're going to know a little bit about what your current asset looks like. Yeah. What else is happening in Timmins? Are there other options on the table for you if you're the guy who can go and raise money?
In terms of, again, we'll be very nickel focused and unlocking the value at Crawford. But there are other targets within the Noble property, that we'll look to bring into the fold. And as we sort of, now that we've sort of done the first phase of work on Crawford to show the potential of that asset, we might look at some of the other properties and unlocking the value, on those specific targets
within Canada Nickel or.
Yeah, within Canada Nickel, within Timmins. Yeah, that's in an adjacent area. That's that's the key piece there. But again, what we're very focused on is delivering the next generation of nickel sulfide projects, for the mining industry.
Right. You're going to focus on what's ahead of you. Okay, Mark. Brilliant. Thank you very much for that update. I know you expected just to talk about your press release, but you did a piece for us last week, which I do appreciate. It's got great feedback about the background to the nickel market. I might ask that you do something for us just to explain the Class 1, Class 2 in a little bit more detail at some point. But thank you for today. Okay. We get it. Do let us know, when do you expect to be going public?
Yeah, it'll be sometime in January. Again, it'll all come down to the shareholder and regulatory approval, but the next major milestone on that front will be the December 27th Noble meeting.
Right.
And then after that, we'll complete the various regulatory approvals, and then hopefully sometime in January, we'll be trading publicly, and we'll have a new update at that point in time. We've got two drill rigs now turning, so we'll have a bunch more additional drilling results, and then we'll be well in our way in terms of the met work.
How do people get access? So we've been asked this online. How do the people get access to Canada Nickel Company shares?
Yeah, so right now, as I said earlier, that the financing right now is fully subscribed. But if there are investors who want to get exposure to the asset based on what they've seen in the press release today, there's two ways to do it. You can buy Noble shares. So they're going to get 12 million shares, and they're dividending out 10 million of those shares. That's effectively, those 10 million shares are 18% of Canada Nickel. Spruce Ridge, who is one of the other original JV partners in the project, is also getting 10 million shares. They have plans to dividend out a portion of those at some time in the near future. And so again, they'll have 18% of Canada Nickel and Crawford at that point in time. So, I would encourage people, again, we've got some pretty good news flow already, and I expect to be able to have more news flow, in the new year. So, and again, if you look at the valuation gap, relative to some of our peers, I think, my hope is that we're able to close that pretty quickly in the new year. And so, I would encourage people, if they like what they see, to pick up some Noble, pick up some Spruce Ridge sooner than later.
This feels like a real story to me, not a pardon my French, but the Vancouver promote. So I'm genuinely intrigued with how you get on and how quickly you do actually deliver this. Thanks for your time.
All right. Thank you, sir. Take care. We'll talk soon.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.